Welcome, traders and investors, to this Wednesday, November 8th edition of the Closing Print. Joel Elconin here to guide you through the last 30 minutes of this trading session. Uh, Kind of where we were this morning. We're trading down just a couple of handles. We'll be keeping an eye on that closing price. 43.96. That's our highest closing price since mid-October. And can we get that 8-day winning streak? I've found resistance just above our previous day's high, 0350, 0775. Had the bulls getting a little bit excited, and then the bears got excited too when we took out the pre-market high, going down to 43.75, but just kind of a lazy rally back here in the mid-afternoon. That's taking a look at the S&Ps. Let's throw the IWM in there. IWM has already surrendered much of the gains that it had back at the 170 area, back again on that monthly support. That has to be a little bit concerning. Triple Qs too. Let's take a look at the triple Qs. Dan Back said he used yesterday's high as a sell point, and he got it. 73.74 was the high. It went to 73.79, and here back down again. So the Q's down on the day. Let's take a look at the dollar. Dollar's having a good day, getting back the losses from the end of last week. Just a little bit of a quiet rally. Not seeing anything up here into the 106 area. Bonds having a good day here. You think that'd be helping the market out more, but it's not, up over a point, 115. We haven't seen this 115 area in the bonds since late September. Gold getting farther and farther away from that 2000 level, down 1830 and 1955.50. And silver, that's in the green by a couple pennies, going the opposite way of the gold market. That's just up at 2262. Bitcoin futures off the lows of the session, now only down a buck 90 at 35,955. We got a lot of stocks to cover here. It's just a couple ones before we go to the first stocks in here coming in from the Thinker. Just wanted to go over a couple stocks that we did cover this morning, just to see how close, how right, how wrong we were. Upstart still having a down day. Didn't quite down to get down to the $20 area. Trying to have a green candle. He'll actually never took out your pre-market low. But then again, not much of a rally in Upstart. I did notice that another dog that I have in my portfolio is having a good day for some reason. MQ, let's see if that is earnings related. Probably is. Let's see. MQ, another one of your payment stocks. Yep, they had earnings after the close and they missed by a penny. Sales a little bit better, man. They don't make much money, 108 million. So MQ having a good day. We'll see if it can continue. As far as the S&Ps go, that 43.96, that's your magic level. We're just dancing above and below that. The other stocks, Rivian, Triple D's bullish slant, not for today, but longer term, not being greeted by investors at all today. Actually heading back towards the late October lows. So you had a chance to sell them when the peanuts were in town. Pre-market high never even came close to that. Your pre-market high was over $19, opened up near the high of the session, overwhelmed with sellers on big volume here for Rivian. One stock that was interesting comment in the pre-market action, the major seller, the iceberg seller at 26.80 area is rewarded today. I don't even know if it traded at that level in the pre-market. No, it did not, or in the regular session. Yeah, it did. It traded a little bit above that. Traded up to yesterday's high, but once again faded. So you not responding to the good Roblox earnings that got through 41 to 42, but you've seen a little bit of profit taking here in Roblox. Hood couldn't find any support in the market. Real bad day. Gap open under $9. It just kept churning lower. Not much to look at here as far as we could go and take a look at the monthlies. Next monthly low was in the seven handle, 767. That's not what you want to see for Robinhood. What else do we have? One stock, an intraday mover. It's a drug approval for another weight loss drug. The uh, the winners continue to be winners here. Can't Zeopound, I guess, is a new drug that was approved. It had ignited Lilly here, coming up on its all-time high, having a real good day here. The only number to keep an eye on here, 629.97. Getting towards that area, trading in the 625 handle. Boy, this is not going to be, may not make a new all-time high today, but it's certainly going to make a new all-time closing high. That previous closing high came in back on October 16th at 616.64. Looks like you're going to close a good $9-10 above that. Over 6 million shares have been traded in this one. So big volume day, confirming another move up in Lilly coming up for all-time highs. So Lilly, one of the big winners today. What else did I have on my sheet from this morning? We commented on Take Two, who has earnings after the bell. Once again, pre-market buyers got a little over exuberant. Some profit taking here above the report pre-market high. One of those strategies using the pre-market high. If you don't get up and follow through to that level, sometimes you see a fade, and that's what happened with Take Two. But we'll head our head on a swivel here with the earnings. Big gap in here from yesterday. That would be down at the 137.28 area. And on a pop, you got to respect the high from today, at least. A lot of people, 148.64. That pretty much matched the high that you had. 148.26 on October 11th. And what else did I have here? Just real quick technicals on Disney ahead of its report. $86. I mean, you just have to respect that area going all the way back to mid-August, up a buck and a half away. But I'd be using 86 as potential resistance, and then if they could say anything good and get through that area, perhaps pops above it, will act as support. That's coming in the House of Mouse, and we're just going to do three stocks, and then we're going to go to our guest, Mr. Todd Gordon. We are bringing him in. The thinker, I did the bonds, but TLT, if you want to look at the TLT, that's having a good day as well. $90 area, you are approaching just one single high there. I like the bonds. The bonds a little bit better on the dailies. Pretty wide open here in the bond market. Don't have anything in here until any clear daily resistance until the 117 area. So maybe you can equate that with the TLT. I prefer to watch the bonds as they trade on a 24-hour market. SQ, I know Pablo asked about PayPal this morning. I talked to importance of holding that $54 area. You did get through it this morning, but not on the close, it looks like. PayPal up just a little bit here, 54 cents. Did we get? Nope, not a new high of the move. A couple days hanging in here more, and maybe we could take out the high, the recent high of the move that came in at 56.72. High close from the move comes in at 56.10. The last one here from the thinker, UWMC might be getting a lift today, right? Lower interest rates. A local Detroit, Michigan mortgage company that's getting a real nice boost here. Opened up, continued to rally. Maybe we got room to $6, and let's just take a look at Rocket Mortgage. If we're looking at the mortgage lenders, RKT, that's up 27 cents. All right, folks, gonna stop the screen share. Bring in Mr. Todd Gordon. He's the founder of TradingAnalysis.com. He is also the founder of Inside Edge Capital. And how you doing? I like that. Oh, is that a quarter zip there? That's a nice shirt you got on there. What's that? That Patagonia or something?
Thanks. I don't know. It was on the shelf at the golf club we're members of, and we're playing some cold day, and I just grabbed it on the way out and threw it on. I have no idea how much it costs, and I don't want to know.
Okay. All right.
Sorry you
Well,
asked.
all right. Here we go. One of the lone bulls on Wall Street is joining us here on the show. Tom Lewis.
Wait, are there really that many bears still out there?
I think they're a little bit in hibernation here. We started the winning streak. We were on a 2-day winning streak when you joined us last week, and now we're on an 8-day winning streak. Just thought, talk about it. I mean, the bonds held in there. That the support of the TLT and the U.S. bonds, it held. We got a little bit of a rally going. What do we need to do to take for it to continue?
The rally in the bonds or rally in equities, or are
Both,
we putting
both.
those together?
Yeah.
Nothing. You know what needs to happen, and I think I'm also going to be in the minority saying this. I wanted long rates to stop going up, which they have. Now what we need them to do is to stop going down. Like enough. Like I think we have crude sub 80, 75 and offered, and now yields are 4 or 5 in the 10-year. Like I'm almost like, okay, enough. Like what my wish is, Joel, for 2024: peace, prosperity, safety for everyone, and FX and fixed income to stop being so busy. Just go into a freaking range, get out of our lives. Like Powell, get out of our lives. FX go back to being like non-existent. Interest rates settle into 4.5, 4.75, 5, and just, that would be the best scenario.
I agree with you. I mean, economy right now, the impending recession that everyone's been calling for, hasn't come yet. The Fed has plenty of ammo in its arsenal, and I think with stable rates, I mean that's just better. It's better. It's better for the banks. They can figure out where the hell they're at on all this
It's
stuff.
so dude, it's so true what you just said. Like my last real job, I was trading for a hedge fund during the GFC, trading FX. And it's the one thing I learned, the takeaway there is it's not the absolute level of rates today that will hurt an economy or help an economy. It's the uncertain future and the velocity, the rate of change on rates is what unsettles markets. So if we settle into 4.5, 5%, and we have visibility on what's going to happen in the future with rates, markets are fine with that. And I don't think that's enough to leave cash on the sidelines. So I don't want rates to go any lower. I don't want crude oil to go any lower, because then I think that starts to suggest that demand is slacking. And then all of a sudden the recession questions back on the table. So I want crude and rates to stabilize now. And then, as I said, in 24, just get out of our lives and let's go back to focusing on these earnings that 82% of companies are beating EPS. They're lowering guidance going forward. This is something you and I talked about, but I don't think you agreed with me last time when I throw you that, not softball, but baseball, is like in this kind of environment, it's so easy for CEOs to say macro environment's uncertain and who knows what's going to happen. Well, now it's not so uncertain. So maybe the bar is going to be low for Q4 and it's going to be easy to beat again.
Okay. All right. That's it. I just want to talk about the wild ride in Celsius Holdings before we move on.
Holy, did you see that report?
Yeah, I did.
Holy, like this is a broken stock right now. It crushed. I mean, it was 100% beat, and they guided strong going forward. They still have the Pepsi deal. I was trading a lot. I got chopped up in that stock. I had stock and options, and it just couldn't hold a bid. It's broken right now. The earnings are crazy good, but last I looked, it was like 175. I don't know if it was back above 180, 178 now. It's so choppy in here. I don't like that it can't hold a bid in such a
Really?
crazy earnings report.
Okay. Well, also the 3-for-1 stock split, which
Yeah,
they did a couple days ahead of the report. What I mean is that like a little bit of a I know you love the fundamentals on it. Is that a little bit of a warning signal for you when you see
I
that
don't
kind of
know, man. I don't
no?
know. What do you think? I would go to you on this. Like, I don't know. Why would they stock split at $180?
Yeah, when you I don't know that either. I would just, I mean, yesterday, if you would, yesterday was the big earnings day. When did it get back up to yesterday's
I
high?
mean,
Oh,
it's
oh, it
it's a, it's
did.
a it's a mess. It's back at the highs, but it's pretty much where it was just before the report. It reported at 175 bucks, 2x EPS expectation for trade 178 now, and it's just a big old sloppy mess.
Well,
I mean, the earnings were spectacular.
right. Well, first of all, I'd like to keep an eye on the earnings the pre-earnings day close, right? It's
Yeah,
always a good level, and it ended up down on earnings. But I think right now you just gotta hope and pray that it can take out those pair of highs. I am really surprised after the day that it had yesterday, hitting 88.98, that it
yeah.
got back up to 188.77. I never would have
it
thought that.
it's so goofy. It's acting so weird. And what I felt good about it is Monster, I think the week before had good earnings, and that stock was bid. And Celsius went bid like $5-6 in the after hours after Monster reported. And I was like, oh my God. So I mean, I loaded up with stock and options. I mean, I didn't get killed, but I definitely got slapped around because I was like, this thing's going to be 200 bid after this report. And I mean, it went 190, 192 after hours, and then
Yeah.
boom, 168 right in your face.
Okay. All right. So after we know that you were locked and loaded waiting for this rally, and we talked to you last week and the week before. Is are you I don't know if you're buying anything up at these levels. Are you tempted to trim anything, or you just gonna wait out this pause here?
No, so I rebalanced all the wealth management portfolios. I've been working. I got up at like 2 or 3 a.m. My wife's right through the window, and she'll confirm that I was up at 3 a.m. just getting everything done a couple days ago. It's been a busy week, and basically what I did is I cut the holdings. I concentrated in the growth portfolio. I concentrated more. I upped allocation in comms and tech, dropped consumer discretionary a little bit. So it's I'm increasing the sort of the beta of the portfolio. I'm making it a little bit more aggressive, up the valuation, the average valuation, because again, we have visibility in interest rates. So yeah, I'm reaching for a little bit more growth. I think we do have 5 waves off the October 27th low. I'm waiting for a pullback. And I left about 8% cash on the sideline. And depending on the depth of the pullback here in the SPOOs, I'm going to put the rest of that to work. And as I said, I think earnings are good. We have visibility on rates. Crude oil is not an issue. Unfortunate situation in the Middle East doesn't seem to be impacting. I like where we're at, and we're seeing good growth rotation, value growth ratio. That's indicator I like to use. We just broke down. You look at Vanguard value into Vanguard growth ETF. We just broke recent lows, which means growth's outperforming. I don't see what has changed. I think it only increases the conviction. There's a ton of cash on the sidelines. I just did a study that Q2 money markets were like 5.9 trillion. And we don't have the Q3 numbers yet. And that'll come out soon on the Fed database. It'll probably be 6.5 trillion, new all-time highs. There's a lot of money out there that ran into 5-6% short-term paper. And I don't know, with the macro uncertainty coming off, like in these earnings, I don't know how money doesn't go back into the market.
A lot of money on the sidelines. So you're waiting for the pullback, or is there any growth issues that that you added recently?
Yeah. So here, let me see here. Let me just go up quick. Do you want me to show you the pullback in the index, or you want to talk about names that I added?
We can do both.
Okay. Do you mind if I grab the screen?
You can drive. Yep. Go ahead.
Okay. Screen number 3, 4, no, 1. Okay. Yeah, so that's Celsius. I mean, like crazy volume ahead of that, like just all over the 50-day, above the 200. Just man, I can't get going.
Get it off your screen. Get it off your screen.
I know, right? So the wave position of the S&P, this is the October 27th low. You got to try to find 5 waves off the low. So you're looking for 2 good sized corrections, and we really don't have much. It's been pretty much a gap. So I get a little wave 2 there. I'm trying to figure out if this is 4. or, this is for, and we have another push, but at some point we're going to need, after every 5-wave move, which it's not clear where we are now, after every 5-wave move, you're going to need at least a 3-wave correction. So I really would like to try to see something, back to 4,300, 4,275. There's a downtrend channel, that captured us from the July highs. Nice regression channel. If we want to come back and retest that, get the bears back out, those guys will get going again on Twitter. And then if we can buy some back 4,300, I think that would be awesome. If we're not, if we're going to go and just sort of keep gapping higher, and this was, let's say, all of a wave 2, and we're already in wave 3, you're just going to have to buy into strength. I would be shocked to see that. I'd be shocked to see if we don't continue, if we go higher without any kind of wave 2 correction. I'm going to be it's crazy how strong this bull market is right now. So I don't know. I really hope we get the pullback here in wave 2 is my preferred outcome.
And so you're not, but you're not trying to, I know like every once in a while when you get a little bit nervous, you're looking for the pullback, try and put on some hedges. But right now, there's really, if we're in this wave 3 here, then you really don't want to put on any downside hedges yet, right?
No,
I mean,
no.
no. Okay.
And what I did, and I'll show you exactly what I'm doing. What I did, and I shared with the members on a research business last night, and I also will go and contact the wealth management investors, and I do like individual option stuff for people. I can't do it across the whole fund, but what I'm thinking about doing. This is crazy voodoo. Everything that I do on the technical side. If we don't get the little wave 2 pullback here that I mentioned in the NASDAQ. I think into year end, this zone in the NASDAQ, 16,000, 16,500 is very attainable. And if we really ramp into the first couple of weeks of January, we might even have 17, 17,500. So I'm actually looking at doing some directional butterflies into the first couple of weeks of January to get up into this zone where it might be like a 4, 5, 6x return to risk ratio, the way we structure it. If it doesn't work, fine. We'll manage risk, but I really am wondering if we're going to ramp up into this zone in the NASDAQ.
Okay.
And I know I'm not giving you a lot of details, but
I
think it's possible that we might try to target these 2 zones.
I mean, the one thing is like there's just been no pullback here. I mean,
None.
like that it just and that just shows, that the buyers are still out there, that the ones that are in are, maybe selling, maybe peeling off a little bit, maybe some, some shorter or intermediate term traders, are just like, hey, my target was 4,400. I'm taking off 500 spoos at 4,400 or 4,400 to 4,410. That's what it feels like. But like even the correction or, the sell off that we had today, I'm thinking, okay, well, at least we can go to Tuesday's low, yesterday's low, right? Is that like out of the realm of possibility? And no,
there's no give back. No. Like the market literally was crashing up, after we got clarity on rates, and the possibility of a December hike came right off the table. Like XLRE real estate is the weakest sector of the 11. It was literally gapping up. The ETF, you look at some of the home builders, like, and the other thing that I like, and this is what some people, I'm even seeing some pros who are getting this wrong. Look at XHB. I mean, it's the housing stocks are gapping up. Like what? And we're in a housing crisis? Like, get out of here. Like, come on. So what's happening, I think some people are getting this wrong, is we're seeing a rotation into value. We're seeing it in small cap value and mid cap value. Not so much large cap, because large cap growth is still going, but the super interest rate sensitive sectors, specifically sub 70 billion, are seeing a rotation in, which I think is good. We want to see some of these beaten down value groups come in. Maybe we'll get small and mid cap growth come in, and that's going to broaden out the breadth, and that's going to sort of satisfy some of the bulls' complaints. So rates topping are so key, and we're seeing value actually respond right now. Housing, industrial, some healthcare, like the rally is broadening right now because we have visibility on rates. So I think the growth might have to take a little bit of a backseat and focus on these, sub $100 billion market cap value stocks. And I think that's a good thing.
Does the IWM chart concern you at all?
I am so again. Okay. Did we talk about CALF?
No, we
Oh,
never.
okay. Let me see
CAF?
if I can yeah, let me see if I can find this. I think I have this here in the Monday report somewhere. Check out the ETF CALF. I think I have it. I think I have it. Where is it? Where is it? Where is it? CALF. Shoot. Oh, I don't have it. Damn, what did I do with it? So CALF is an ETF that tracks the top 100 free cash flow small caps, and it's right on par
Wow.
with where the SPY is. So, okay, you have how many zombie companies in the Russell 2000 that are never going to make any money that are leveraged,
Mm-hmm.
and you look at good small cap companies with good free cash flow. There is no bear market in small caps. So I don't want the crap companies to participate. This is a stock pickers market with higher borrowing costs, and now all of a sudden we're not in zero interest rates anymore. Not everything's going to go up. So, oh man, I wish I could find this for you. That look at CALF and just put it up against here. I can do it quick. Put it up against the S&P against IWM and even the S&P. I'll do it quick. CALF. Come on. There it is. Okay. So here's CALF, Pacer US Small Cap Cash Flow 100, small cap with good cash flow. This is CALF. Here's IWM. Okay. And then if you throw it up against, I can also throw the S&P up there, instrument overlay, SPY. CALF is actually going next to SPY. Come on, weekly, daily.
Wow.
Okay. So let me get rid of this line. Let me make this clear. Template, open, high, low, close. Okay. So CSPY in red, and then CALF, small cap stocks that actually make money. It's right on top of the S&P. And then here's IWM. So, like there's way too many regional banks, and I think there's going to be consolidation. There's way too many companies that have been existing in very low cost to borrow environment. They're going to be wiped away, and I say good.
Okay.
So I don't think I need it.
Okay. All right. Interesting point there. I'll have to listen to that again and throw that at Triple D when he talks about the IWM. One final thing. The last time we had a 7-day winning streak, and it looks like we're going to have an 8-day winning streak here, the S&Ps, was November of 2021.
Okay.
Now we know what ensued in 2022. Where is that something that is just it's just a fact that people throw out there like that, or is it something that makes you maybe a little bit cautious on this rally?
So November 21 is the last time we had 8 consecutive up closes.
Seven in the S&P.
7.
Yeah.
Okay, so it ended on November 4th of 21.
Yeah.
Okay. On first blush, like, okay, when you have 7 consecutive closes after the market has come, where is it? November, where was it? Right here.
Yep.
After the market's come 111%. Yeah, it's concerning. But when you have a market that is, dropped 30. Oh, get your closing print.
I'm gonna call it 43.99. I took my eye off it for a second, but it looks like we just missed that. Oh, but 8 days in a row. So, but no, finish at that point. I'd really like to hear your final conclusion on that.
Okay, well, I don't think it's going to be anything too
Okay.
profound, but I mean we're 14% off of the highs from the all-time highs. We are 10.9% off the recent highs, and you have the Fed that's been verbally abusive to us for so long, for higher for longer, and finally the market figured out that we have clarity on rates, combined with so much cash on the sidelines. And Tom Lee threw out that CTA position is 115 billion of CTA money that's short. And plus I've got, I can show you somewhere over here. I've got, new all-time highs in cash and money market funds. I mean, this is an underinvested market, which, I think it's a totally different situation. It realized that we have good earnings and the market's just in a sour sentiment mood. And we have clarity on rates finally. The Middle East, with sub $80 oil, maybe there isn't going to be the impact that we thought there would be on the stock market and the economy. I think it's a much different thing than a
Okay.
market that's up 120%.
Okay. Todd Gordon, he's the founder of tradinganalysis.com. Also, Inside Edge Capital, giving us great fundamental technical outlooks on the market. Really appreciate it, Todd. We'll be dialing you up again next week.
Thanks, Joel. Appreciate it. Have a great rest of the week, guys.
Okay, keeping an eye on the House Mouse, Beyond Meat, if anybody really cares. Twilio, AMC, and Take-Two Interactive giving you that news today that's about Grand Theft Auto. Let's see how they react to earnings. So, folks, thanks for joining me. I think I saw that closing print right at 43.99. So, couldn't get that close over 4,400, but we did get a 8-day winning streak. Thanks for joining us.